Okay, commodities. So, well, we normally start with the yields here, but this is the Australian yields here on the 2 years. So we don't want those. We want the US ones, which are not a big difference. They all follow each other. So the 2 year yields here, we've got this as wave 3 and 4 here, is really pushing these tops here, where the 10 yields are lagging behind a little bit, as you can see from this high to this high. So I'm just going to remove this line here. But the last time we spoke about these, we were looking for it to, continue to move up, and obviously hitting this 4 here, which is a big number, that's going to distill those orders there for a while. So we should see, the normal sort of pattern that we would see here, a bit like this over here. So we have the arrival, the reaction, the first high above the level, then the A wave, the B wave, and the C wave coming down. In this case, we're looking for a bigger one. If we were going to go long, we'd start from the top and then we'd go down to here, but we've got this bigger correction occurring. So the classic trading levels pattern has kept us a little bit safe at that point. So this would be it here, the arrival, the reaction, the first high above the level. So we go along above there, then we go along here, but in some cases we get a bigger correction, and then we look back over here for that. So that's really where that is at the moment. So this one here, we'll see another one of those particular patterns here. But if it's a wave 4 here, for example, then we should take the top out here. So we should end up, moving up. How far, we'll see at that point, but we should be moving higher. So we'll look to count that in due course. But yeah, that top is not taken out, whereas the 30 yields, they should be even lower still. So they're lower here in that particular space, but still also at 4%. So we can put a line in there because we're going to see the dance occur there, and we can see it already, so but we should see that build in that way. It doesn't very good in terms of, it may not follow the other ones in a sense, but we'll have to tie the ABC into it. But it's not giving me 5 waves here, it's just giving me 3 waves here. It's giving me 5 waves here, but it hasn't made a new low here. So we may end up with something different from the 30 yields. But the point being at this stage, it has been over the weeks, is that the 2 years are leading the way, and they will take the top out here first, and the others will follow. When this hits the 5 up here, the others will hit the 4, and this will hit the 5%. So there's going to be a classic trading levels pattern here. In a way, it's the same thing as well. In this case, we can call this the arrival because it's pretty close. Sometimes they're a bit short, sometimes they are on the nose, and sometimes they're slightly above. But whichever way you want to look at it, we've arrived here and we've got a reaction here. And in this case here, we'll be looking for 5 waves for the first high above the level, wherever that may be. We'll need to do some work on that, and then we'll get an ABC pattern over here for that, and then we'll be going up higher at that point. Because we're getting 5 waves up here in the bigger picture, then let's just go to the 10 yields. That means that we'll be looking for further upside here. I think we'll just go to the weekly chart here. I know that I'll probably bore you to death looking at this all the time, but I think it's important that that we look at what's sort of happening here. So it's probably a little bit out of whack at that point here, so I'll just bring this down. Let me get Mr. Squiggles out here. So wave 5 will be around here somewhere, and then we're going to see some sort of, I still did that a little bit big, but anyway, it doesn't matter too much. It'll be something, because the nutshell of it is, because we've got 1, 2, 3, 4, 5 here, because we've got 5 waves here, that means we'll have some type of correction, let's call it that. It could be small, could be big. It can pull back to the 50-60%, most of the time to the wave 4, one lesser degree in these stages. But because we've got 5 waves here, that means we'll get another 5 up here. Now this 5 up here can be an equal length to this 5. It may only be 61-62% of the length of this, or it could be the length of this plus 61.8%. So there's a variety of things that it can be. But either way, I reckon would be up at 8 or 10% here. I mean, that's just the Elliott point of view. And then when you've got the Elliott point of view, of course, you've got, you chuck in, you chuck in a few analysts, you chuck in two analysts, you'll come out with half a dozen answers. You'll never get the right, well, you may get the right one, you could get the right one, but it's all a little bit discretionary, let's just say. But to me, this makes such a nice third wave for an impulse wave, I mean, wave 4 could get uglier, and I can get that wrong, easily. But the fact that that's a third wave, the fact that that looks like a fantastic third, was what I would expect a third wave to look like, and everything about it is just perfect in relationship to wave 1 and so on and so on. So that means that the extensions in wave 3, so wave 1 and wave 5 will be sort of roughly the same. So that will take us to the 5%, and then we'll have some type of correction, then we'll go up again. So you want to be paying off your mortgages, before this takes off up here, I reckon. Anyway, that's that. Let's continue on, and we're looking at the US dollar now. So with the US dollar here, this turn that's occurred here, we know that this particular turn coming, from this top here, coming down here, we know that when this started to come down here, the stock market started to go up at that point. They started to rally at that point. Now with the S&P 500 and the Nasdaq, it's difficult to count. While this is having 5 waves down here, it was difficult to count 5 waves up for the S&P 500 and the Nasdaq. They've got like 3 waves going up. But the mirror opposite to this here is 5 waves coming down here, as we can see that the euro here has got 5 waves up here. The European indices have got 5 waves going up here. Pretty much any country outside, not all of them, but most of the countries outside of the US that are US dollar influenced will have 5 waves going up, while this has got 5 waves going down. I'm in Australia, and this is the Australian dollar here, and it's pushed up in 5 waves. In fact, our stock market has pushed up in 5 waves as well. So there's a lot of synchronization with, in the markets with all of this. Now this move up here, if this is going to be 5 waves down here, which is a damn good case for that, and 5 waves up in the Australian dollar, and there's a really good case for that, and the euro and the DAX and so on. There's a strong case for having it the way that I'm mentioning it. The next question is that the move up here, when we have 5 waves down, you would have, a corrective wave coming back up 40%, 50%, this is 60%. So 40, 50, 60%, somewhere up here, depending on what's going on at the time. And that's why it's always better to count the structures to the upside. So the question is, though, is this current move up here, it doesn't look like it's, I mean, I've got it labeled there, so that's a bit of an influence. But just thinking about how many days this took here, right, this is a daily chart, these many days to these many days, is that enough to rebalance the trend? I mean, a lot of the time the market only needs to go back to the wave 4 of one lesser degree and then move down at that point. But however you look at it, it still seems a little bit small, doesn't it? When we look at the euro, the mirror opposite to it, its pullback here also looks a little bit small as well, doesn't it? The pound, the cable has been pretty much tripping sideways, so it's stronger in that sense. The Australian dollar, which is pulled back further here, but even so, I won't go into all the details here. You can look at that in the Aussie video. But from B to C here, we've got 1 and 2 and 3, 4, 5. So we've still got a bit more to come down in this before we can push up in that. So it helps to look around and see how things are going, with all of these. there is a good case for putting wave B here and having 1, 2, 3, 4, 5 here and having a C wave in place here. But I think it's a better case for having this as the A, the B, and the 1, 2, 3, 4, and the 5 here. But the problem with this situation so far is that wave 4 here now has overlapped wave 1 here. I never really find that a big deal within the FX market, especially when you got leverage and those sort of things. It's the rule that gets broken the most, and especially when you get into the intraday things. Now we know that wave 4 can overlap wave 1 in a triangle scenario. I don't have a triangle here, but I've seen when Elliott made his rules. And I'm pretty strict sort of Elliott sort of fan, as such. But, he made them in non-leverage markets, and, where we can see that in low volume, high leverage markets, you're going to get overlapping wave structures within reason. If there's no other way to label them, then, you need to accommodate certain things to a point. Now, this particular wave count is pretty much how we've got the euro and the Aussie dollar and those sort of things. So we're looking for another move up here. That would give us 1, 2, 3, 4, 5 up to this point. So we may only end up coming back into here. We also, when this tops out here, we want to have a low in the S&P at that point too, and we're looking for a low around the 39. We're still flicking around the 4,000 for that, but so anyway, we could have this in here. Now I just want to go in and talk about this a little bit more, so we're going to go from here to the intraday here. And we're going to just shoot the breeze over this a little bit. So we've got the low here, we've got the A wave, the B wave here, and that suits quite nicely with the Australian dollar and the euro and all of those sorts of things. So, and then also with those other markets mirroring this one, we can look at this as wave 1 and 2 here. And we can look at this as well. This is what we need to look at this as now, because if I count this up here as 1, 2, 3, 4, 5, I could put the third wave here, but the fourth wave overlaps here, and it overlaps on the euro, but it doesn't overlap on the euro dollar, but it doesn't overlap on the Aussie dollar. So there's two ways we can go about this. We can say, okay, well, we'll accept that wave 4 overlap here for the time being. If it would be true if we get 5 waves up here to wave C here, and then we can see a nice impulse wave to the downside here. And if we get an impulse wave to the downside here, then we know that we're going to get a corrective pattern back up, and then we're going to get another move down. Now, in that case, then the wave 4 overlap here would be, we'll just have to suck it up and say, well, how else are you going to count this? The other way that we could count this is look at this as wave 1 here and wave 2 here, and then look at this as wave 1 to the upside and wave 2 here in green, and then wave 3 here in green, and then wave 4 in green, and then wave 5 in green to make wave 3 up here. So that's the other way we could go with it, If that was going to be the case, then we would need to see, when you think about it, would have this as wave B here with 1 and 2, and then 1 and 2. So we would be in the third of the third, and then very shortly, with this pushing up here, we're going to be in the third again at this point. So we're going to be in the third of the third of the third here. So that should push off really strong. So let's just wait and see. I mean, we basically know that we're in a trend to the upside, right? It's just which way we count it, and we're just discussing it. That's all. I mean, I'm just presenting ideas here. That's all, and trying to get my point of view across. And sometimes I don't know, and this is a situation where we've got a situation here, So let's see how fast we push up, because if it's going to be a third wave up here, we're going to go up quite strong. If it's going to be a fifth wave, it's going to be lazy over here for this, this one over here. I mean, looking at the Australian dollar and gold and all those sort of things, it's kind of like this is the one that we should be looking at this point, you know, with wave 5 and wave C over here. But I don't know that yet. But we can see that, you know, over the last few sessions, we've been looking at this corrective move coming back and looking at it, and you know, now it's overlapped that, so chucked a bit of a spanner in the works. And could it be the wave 2 here? But we're seeing this push up. It's hit the 61.8% at the moment here, but that's not the real supply is a little bit higher here. We still need little 5 waves up to finish that off there and pull back and those sort of things. But anyway, that's where the dollar is, and it's been very helpful in understanding other markets at this point. But the takeaway is that we're still trending up. It's just we've got a situation which is the best way to count it. I'd like to, if I don't know like it is, I say I don't know how it is, and it could be this and it could be that. I will resolve it by looking at the speed of the next move to the upside. All of that said, because there's a good possibility, there is a possibility that gold could have a low in place. If that's the case, then wave B would go here, and then wave 1 would go over here. Wave 2 would go here. Now, we had the Feds mention a few things here, and it got spiky, and it spiked that low out, so that's why I went with the C wave here. But if we accommodate the spike and then go 1 and 2 and 3 and 4 and 5 and have wave C sitting here, that's a possibility. If this was going to be down for 1 and back for 2 here, if this is breached here, this low, if that's breached, right, then we've got a top in play here. Now, it could also just be a top in play for, when you think about it, just to make things more complicated, we could have it as a B wave over here and a C and an A wave over here and a C wave up over here. So there's a few possibilities that can play out with all of this. So I'm just pointing them out, and that's the idea of the videos, is not to set things in stone. I mean, all we're looking for at the end of the day is a nice solid trade setup in particular markets, and we use Elliott to help us find that. As far as the crow flies at the moment, we're seeing impulse waves to the upside and corrective waves to the downside. So that means the trend is still moving up. I'm just pointing out at what point this 104 here on the Dixie would be a breach of the trend to the current trend to the upside, you know. Okay, so US spot gold. So we were counting down like this with a little 1, 2, 3, 4, 5 here for an A wave, a B wave, and then 1, 2, 3, 4, and we're counting down here. I've removed the little green dudes here, and we've seen it. We knew that we'd get a bounce off this number. 8 is the third strongest number, 1, 5, and then 8. So we knew we'd get a bounce off that. But the interesting thing here, that little bounce here, it looks very much like an impulse wave. So one of the things we could do, if we get 5 waves off the low here, well then the natural thing to think about is that we would get a correction here, which we've also got, and then we'd get another 5 waves up here. So that would take us to this supply level at that point. So what we could do is we could say to us, this is where it could fail and move back down at this point. And we can rearrange this count. I'll give you another count for that in a moment. But the only way I'd turn bullish, because the US dollar hasn't got a top in place, and it is important because that top here on the 2nd of February, that where it topped out, was the day that the US dollar found the low here on the 2nd of February. Now, if this is still trending up here, then this should still be trending down, and my counter here is worthless, and that wouldn't be the first time, and so on. So for me to turn bullish here, I would need to see a larger impulse wave to the upside here. I would need to see 5 waves up. Now the thing is, you might say, well, Pete, you know, you're costing me a lot of money here because we're not getting in. Well, I don't think so, because even when we got 5 waves, we're going to see some type of ABC pullback, and if we've got 5 here, then we can move into the 50-60% retracement level here and count this down as it should be a wave A or B or 1 and 2, and then we can catch this third wave up here at that point, or wave C here for a bigger move, you know. But it is interesting, we're getting that little move here, and we're also getting that on silver as well, and we're looking for a low in that. We haven't really reached our target area here, so there's still space for it to come down into the 1750. So I think that we should give it a little bit of breathing space for 2 reasons. The dollar hasn't topped, we haven't reached our target here, we'll expect to get a bounce off the number 8 here, and I think that it could end up just being 3 waves and a move down at that point. So another way to look at this here would be, I think I had it on the 1000 tick, so we'll just have a look. Maybe I've got it on the wrong one, but okay, so this was just another way to look at it. This was 1 and 2 here, and 3, because it does make a nice third wave. It does make a nice fourth wave here. You know, I mean, it's messy, you know, that's the thing. We should call this one female because it's always nice and clean and tidy, and then this we can call the male. I'll give it a or the Germans, the French, the Europeans got pronouns for these things, so because it's messy. And we've got 1 and 2 and 3 and 4 and 1 2 3 4 and 1 2 3 4 5 here. So we could, I'm just saying, you know, and I'm just having a conversation here, even though it's with myself, but you know, we could look at it as 5 waves down, as the A wave and then the B wave here. I mean, our Australian stock market is a little bit like this, and our banks are like this as well. It's not the only market that we're looking at it with the A wave down here and looking for a, you know, be a little bit different as an A, B and C, or I need to reconcile this a little bit more to see how it plays out. But I don't think you know, you can go long if you want to be long in this market, don't worry about that, you know, because we got that impulse wave off the low. We'd better go in and have a bit closer look at that before I open my gob too much. 1 and 2, 1 2 1 2 3 4 5 for the third wave, fourth wave, yeah, probably 1 2 3 4 5 there for the third. So we're going into the fifth, so we can put the A wave up here. If you're going to go long in this market, we'd still need that to push up. It shouldn't push up too far because the extension's in the third wave here, so 1 and 2 and 3 and 4 and 5, and then there'll be an ABC pattern here. So you could buy this back here because it's quite a clean structure at this point. And yeah, we can pick this up tomorrow in the you know, in the Australian video, and we'll just check on this a little bit further here for that. But yeah, I'm thinking that we got something like this, you know, and then we come down at this point with another move to the downside. But I'm not sure if I get that extra 5. If I get 1 2 3 4 5 up here, then we're going to get the ABC back, then we'll go for it at that point. But because it's not lining up with the US dollar at the moment, I'm concerned about it. Okay, so I'll just wait for, and this is the same thing applies to this market here as well. We're getting that impulse wave off the low. We're coming down close to the target here, but you know, they just mirror each other to a point. Let's see, this will be the same thing. We're going to get something like this, right? Now, we can come down at this point, or we'll get the 5 waves here. So if we get the 5 waves here, then we're going to get some sort of ABC pattern, and then we'll go up from that point and we'll catch it. By all means, you can trade it up to here. I'll leave you to do your own thing at that point, but this is where it gets a little bit iffy at that point, if we just get 3 waves up. And even when we get these 5 waves up here, we have to be a little bit careful as well. It'll be interesting to see how it takes up against the US dollar while the US dollar and this are moving up together. That will be sort of interesting to see. But it could just pull up into anywhere into this space over here and also fold at that point. So there's work to be done here on this. I'm not going to worry about it too much, but we've been tracking these particular counts and looking for lows, and we can count this as 5 waves here as well. So everything's going according to plan, but it's just not in line with the dollar at the moment, and that bothers me a little bit. Before we move over to crude, I just want to have a quick squizzy at the metals now. With the metals here, that's not the metals. This is nickel. Okay, so we'll look at the nickel market for a moment. Now, this is an Australian stock that we were looking at on intraday basis, and we're looking for 5 waves down here, because we're looking for an A wave, a B wave, and a C wave down here with 5 waves, 1, 2, 3, 4. So it was interesting today in the Australia to see that nickel push up there. We're still a wave short here, but it's great news that it's made a dent in the trend here for that. This is the index. This is the index here. I just better go back to this is the Dow Jones index here for this. So let me just get this into play here. So obviously I've got a few other things in here. So with the nickel here, this is the Dow Jones Commodity Index nickel, which is the same as the futures market that we've been looking at on the other charts. There is a good case for the A wave here, the B wave here, then 1 and 2 and 3 and 4 and 5 up here. There's also the case of 1 and 2 here, and then 1 and 2 here. I understand that, but we've got a move here that's got 1 and 2 and 1 and 2. So we're just tracking it to the downside. I'll just see how it holds up. I can see that we've got both sides to the market, and there's a few other counts in here as well. So this here, we are down in the 61.8% retracement level area here, going into the 76. So it's putting a bit of weight on the market at this point. And we could also look at this here as an A wave up here, by the way, and then a B wave in over here, and then a C wave up over here for that. So there's nothing to do here. I wouldn't be long in nickel at the moment, and also for copper. This is traded on FCX, traded on the New York desk, and it's also quite interesting. It's got the same pattern as high grade US copper futures market. It's got this pattern here that we can call as 1 and 2, and 1, 2, 3, 4, 5. So we can look at this as wave 3 up here, going back for wave 4 in this box, and then going up for wave 5. If we get 5 waves up here, right, and this move down here, wave 4s can get complicated, so there's no point of even going in here and pulling this apart yet, but it's probably an A wave to here somewhere, and then some sort of B wave coming into play, and then some C wave here. So we just need to wait for that. At the same time, we could look at this as an A, B, and C up here for the big B wave up here, and then come all the way down for the C wave. I don't know that yet. We just need to see how it plays out here, and what the dollar does and all of those sorts of things. So while the dollar's been pushing up, this has been my story, while the US dollar's been pushing up, we're seeing softer commodities. Right, when that dollar tops out, when we can find a top in the dollar, then we can look to buy commodities. It's that simple. This is copper here for the futures market thing. So it's the same story here. Do we look at it as 1, 2, 3, 4 here, and then up for 5, or do we look at it as an ABC pattern here? Once we've got the 5 waves here, it's going to be fantastic then, because we'll have 5 waves up here, then we'll have wave 2 here, so then we'll be going into wave 3 over here at that point. So that's but we need those 5 waves here first. So the buying opportunity is over here, even though when we take out this top here, we'll know that we're in a bullish market. But we can go short-term long here, but we can't go long-term long here, because we'll be facing this. Unless I've got something wrong, which I'll double check everything. I can see a few problems in all of this, but generally that's the gist of it all. We need to work out if we're going to get an impulse wave here. That's the story with copper and all its copper stocks within all of that. And the lithium, So this is the biggest lithium stock in the world, $150 billion worth out of China. It's got interests in Australia. And all I can say is all the lithium stocks will be doing this. They need to finish off while the US dollar is pushing to the upside. These are pushing to the downside here. So it'll be all of them, your SQM, ALBs and LACs and all of these PPLs and all that sort of stuff. So that's where, and uranium will be the same as well. So they'll all be pushing to the downside. So there's just still more downside for commodities, for base metals or green metals or whatever we call them these days. While that US dollar's pushing up, these are pushing down. So I'll leave it all as simple as that for the time being. So our main focus is on the US dollar topping out, and then that's going to give us buying opportunities for everything else. Okay, so over to the energy market. So I had a look at crude. I think, look, I pulled apart a lot of these structures to go over them again, and there is a bullish case, but the bearish case is stronger in all of these internal structures. So we can look at it as wave 3 here with an A, B, C, D, and E here. Now, triangles don't really respect the 50 and the 61.8%. Sometimes they come in, but most of the time they will just do their own thing. So expect this to have another little push up here. We'll have a look at all this pattern in a bit more detail in a moment, but I just wanted to give you a nice clean picture. So an A, B, C, D, E here for wave 4 that will come in, across the top here somewhere, up here a bit, and then move down from that point. Now, what happens if I'm wrong? Well, it's the same story as it's always been. If we can get, the first high above the level here, then we'll look to go long above that. Now there can be a second high here, then we can bring it down to that point, and we just do the normal classic trading levels pattern on this number if I'm wrong. So this is what I'm expecting. If I'm wrong, we'll still need support on top here. Trading above the levels is not, poking its head up here is not support. Okay, so we need that retest. The basic pattern, that's it here. So we need the arrival, the reaction, the first high above the level. We need all of this, and then we start coming down from the top here. We can improve on our entries, but we need support. So support can be simple or it can be complex, and in hindsight it's simple, but when you're working through it, sometimes it's simple, sometimes it's complex. But I know what I'm looking for, and I rarely make mistakes on that. I can do, but I know where to put the stop at that point. So we'll just go into a bit more detail on this, on the 5K tick, just mainly for the end of this. Now, we know that the government is buying stuff in this price to restock their piles, all the stuff they've done. They need to fill their barrels back up, whatever. That's what they're doing at that price. So this here, if we've got this as C of D here, then I could look at this in two different ways, but the A wave here, the B wave here. I could also put the A wave over here and have this as the B wave here and go up another wave. So I'm mindful of that. But as it stands, the A, the B, 1, 2, 3, 4, and we're looking for 5 waves to move up here. So we'll just keep a bit of an eye on all of this, and but I'm not. You can go long in the short term here because this particular pattern here is in 3 waves, so it's going to take out this top. So you can go long right now and keep a stop here. How far you get up, that's up to the trading gods at this stage, but it will want to push up, but there's plenty of supply up here, so it'll get a little bit messy. Okay, and for natural gas, so with natural gas here, we've been looking at a wave 3 low going to a wave 4 low high here, and then a wave 5 to come down. This is the 38.2% at this point, And it's also possible that this is not a wave 3. It's also possible that this is a wave C here from an A and then an A and a B and a C wave sitting on top here. But I'm putting this back over here for the time being. But there's a half a silly chance that we could have something like that there as well. So we're looking this up here as an ABC pattern. And as an ABC pattern, it's easy to label it 1, 2, 3 because as a bullish move too, because the internal structures are the same. Okay, so yeah, we called the low in. We've just been counting the waves to the upside. We're going to see a correction across the major trading level 3 here, which is the $3 point here. We are seeing this up as an impulse wave, so we will be seeing it further up. Will it reach this target? Will it be short of that? I don't know. All we can do is track the internal structures to the upside. I'm not sure what I've done here on all of this, so I think I might have something on the 5k that's a bit okay. Well, anyway, this is the start. So in a nutshell here, we're looking for the 1, the 2, the 3, the 4, whoops, a bit high, and 5 coming up here for that. Then we're going to have some sort of ABC pattern, and then we're going to move up again from that point. So we need to talk about this a little bit further in here with a bit more detail, so that's what we're going to do. I'm just wondering, I think I'll just go to, I think I've got this as wave, while I'm here, while I'm looking at this, wave A could be just in here or it could be up here. We'll need to talk about that. At the same time, we were looking, last time we spoke, we were going to look at this as a bullish wave to the upside as well. So this is the bullish count to the upside here. So we can put wave 5 here, and we can put wave 1 here, and wave 2 to pull back in here, or we could stretch this up here further. So we could put this here as a little wave 1 here and extend this up further. And wave 2 coming in here, coming back. This is 1, 2, 3, 4, 5. So we're getting close to a little top here anyway. Will it be wave 1 and 2 and then push up for 3 up in here? And then wave 4 and wave 5 coming in here. So we could end up seeing it like this here, or we can end up seeing it sitting in here as 1 and 2 in here. So the thing is here, we're either going to go up here for 1, we're going to see a little ABC pattern come in here and then push up into 3 here, or we're going to see this come down deeper in here and then push up at that point. They're the two things at this stage. We're going to go to 100 ticks and have a closer look at this situation. So let me get in some more data here. 5 should be enough, yeah. So that's the low that we'd been looking for, and so on and so on. So that's all there. And yeah, so we've got wave 1 and 2, and then we've got 3 and 4 here. And if you've got a keen eye, you can see that this structure here, we can see that, you know, with all degrees of markets are just trends and corrections of different degrees, and this degree here, we can see that it's strong in the middle, isn't it? So this will be wave 1 and 2 in here, the third wave will be in here, and the 4s and 5s will be in here. Now we could have a top in, we could be a little bit higher, but the question to ask ourselves, is it going to be this wave 5 here, or is it going to be wave 1 here? And then if it's wave 1 here, then we're going to have a wave 2 here, and then we'll push up for a wave 3. So we need to kind of consider this for a moment here. So we can see that the third wave is the strongest here. So normally we would say if the third wave is going to be the longest and the strongest, then wave 1 here, and roughly speaking, and wave 5 are going to be roughly the same length here. So there's a good possibility that we've got this wave 5 in here. I know that as an A wave here, or wave 1, it would like to get to this big number up here. So it could stretch itself up there. There's nothing sort of stopping. And the thing with commodities is that we have to recognize too is that it's quite often the 5th wave that you get the extension in it. With stocks, it's the 3rd wave, but with commodities, it's it can quite often be the fifth wave here. In both cases, for example, in both cases, this will come back here in this case, and the other case it would come back. It would just come back to the fourth wave of 1 lesser degree and push up. So there's not a lot in it really of how far it pushes back. So that's one thing. The other thing is we can go in and take a closer look at this now. Well, this move here is corrective here, especially if that top gets taken out. So we're likely to see at this point a move up here, and then we're going to see something like this here. So what you can do if you wanted to add to the positions and so on is really look for this here on the top there. So because if this pulls, if once that top's in play here, you can put your 50-60% retracement level in here, but it doesn't have to pull all that way back. It may just pull back into the 40% here as well. And then we need to take into consideration, like we're in group 2 here, so the medium level here, talk about the trading levels now, the medium level, then group 2 here, and once a market's in group 2, it normally sort of stays in there. So I'm more inclined to see this push higher rather than pull back, because I know where we are within the structure. So I'm thinking that we'll probably end up seeing something like this here with this, and then topping out here for the A wave up here. And this would be 3 here, and let's just get these while we're here. So that would be the A wave at that point. And then we're going to see a B wave here. Now the B wave here, I don't think it's going to come back and test group 2, because when we're working with, move that down a bit, when we're working with a large number like this here, we use group 1 above, which is just 1, 2, 3. I know that's really complicated, and then we've got 5 above that. But this group 1 and group 2 here, that's the swing range for the market having a correction at this number. If it finds support on this number, then it be pulled up to 5 at that point. If it can't find support here, then it gets pulled back down. This will be the support, this will be the resistance. And normally the support over here is established already because of when it first comes up here. So this top here now will become the support for this, and later on it'll become the support maybe for the A wave here, or the C wave here, or something of this nature. So we're going to be looking at something like this with all of this, depending how high this goes here. This can go much higher, of course, but we can put those over here. We don't want that wave 4, that's way over there, and that wave C, we can push that up there. So we know our 38.2% retracement level is up here for this. And we also, too, we have to consider that this can also be wave 1 up here as well. I don't know that yet, but we put them on the table, and we're aware of them, we work through them, we play to win, all of those sorts of things. So this is where we're at the moment with this. So if you're in this market, the worst thing that could probably happen is to come back to this level here. That would be the worst. That's the heat. So you might be able to hedge in another market or do something. Yeah, but that's where we are. Alrighty, I'm going to leave it at that. Thanks for tuning in. Cheers.